can 100% commit to this challenge in the next 90 days, you will drastically transform your trading. If you can't stick to this 90-day challenge, you probably don't have what it takes to be successful at trading. If I discovered this earlier on in my trading, I would have started making consistent money 5 years earlier than I did. This challenge will help you escape that cycle of consistently losing money and turn your trading into a money printing machine. Now, this 90 days isn't a random number out of thin air. Todd Herman is a coach of elite athletes and entrepreneurs, and his whole framework is that the best way to push yourself to a goal is a whole program called the 90-day year. There are multiple studies that have shown 90 days is that kind of sweet spot for goal setting. It's far enough to allow you to have a big goal, but close enough that it's tangible and easy to focus on. To make money trading, you have to focus on the process of getting 1% better every day. You won't tangibly notice yourself getting better daily or even weekly, but over months you can look back and you will see a drastic difference. Once I realized trading psychology was the key to be successful at trading, I went from consistently losing to starting to consistently make money. That's why over this challenge, not only do you need to track off how and why you got into your trades based on your strategy, but what emotions were you feeling when you made the trading decision? Did you get into a trade too early because you had the fear of missing out? Or did you jump out of a trade too early because you felt the fear of the trade turning against you and you didn't want to give up your profit? The biggest one people don't realize is tracking the trades that you actually skipped because of negative emotions. Did you not get into a trade because of fear? This was the biggest negative emotion that was impacting me and my trading when I first started out. If you don't keep track of that too, you're missing a really big piece of the puzzle, because it's not technically a trade that you took, so it doesn't affect your results, but it's a trade that you should have been in, so it should have affected your results. Now, if you don't have a trading strategy, I will show you a trading strategy that I use that you can use during this challenge in a minute. You have to remember trading is statistically based. Just because a trade lost does not mean you did something wrong or your strategy didn't work. I got the privilege of talking to a hedge fund manager about backtesting or reviewing your trades, and he said the biggest issue people have is unknowingly making changes that hurt their overall profitability. What he means by that is thinking that every trading loss you take has something fixable, would either make it profitable or avoid the loss entirely. The market has infinite possibilities. Anything can happen. Every loss doesn't have a lesson. Sometimes that lesson is just that things don't always go in your favor. You can take a good trade setup and it still turn into a loss. He also stated that backtesting is almost worthless when it comes to a specific trader's profitability, because at the end of the day, a trader's success is based off of their psychology and ability to execute the strategy. The biggest reason people fail at trading is because when the strategy doesn't work out, they look for other things and patterns to make it work, or they switch to a whole new strategy. And I like to call this the infinite learning loop. There are infinite ways to trade in the markets, and there is always interesting new information out there that you can find. This is where the 90-day challenge comes into play. So the first thing that you need to do to stick to this challenge is to open up a separate trading account. Or if you're just starting out, open up 2 demo accounts. You're gonna have one account that you focus your main strategy on in this challenge on. And if you don't have a strategy, again, I'm about to show you one you can use every day. Then the second account is so you can try other patterns or strategies that you feel the urge to test. When it comes to journaling, track them separately. The whole idea of this challenge is to make you stick to one strategy and prove to yourself that it works. Remember, the biggest reason people fail in trading is that learning loop that they get stuck in. It seems so basic and dumb, but to be successful at trading, you have to do what people aren't willing to do. And as basic as it sounds, people aren't willing to push through the struggle of sticking to one strategy and working on perfecting that. They constantly want to look for the next pattern or indicator that will make things easily work without putting the hard effort into trading. So for the next 90 days, trade one strategy in your main account, stick through it through thick or thin, even if it seems like it's not working out, because you need to build a journal of trades so you can see what's working and what's not. Don't make changes to your strategy right away. You need to stick to at least 20 to 30 trades to get enough data to logically be able to make a change to your strategy. If you want to make a change after a couple of losses, that's your emotions wanting to make a change because of fear of losing money. If you feel the urge to try other patterns, That's what the separate account is for. You can still make money from them, but it keeps the accounts separate and the strategy separate. So when the dust settles, you can tangibly see the results. To get the most out of this challenge, create a framework that you can focus on every day. Focus on building habits to keep you on the right track. One thing I do is I read my trading plan and my goals right before I trade. So I'm focused on sticking to the strategy and not the results of making money. I look at previous trade setups that I liked, so I know what good ones look like. I remind myself what I'm looking out for when I'm trading. Trading psychology is the key to become successful at trading, but having a strategy that you can be confident in is the foundation of everything, especially when back testing doesn't really work. Let me walk you through the strategy that I've honed and traded over the years of my trading that you'll be able to use with confidence during this challenge. So the strategy I use is really simple. It can be used on any market or any time frame, but what I do is I focus on reversal trades on the futures market. And so another thing that made me profitable was realizing that one strategy and one pattern makes it easy and simple to focus on to become profitable. And so what that pattern is for me is looking for reversals in the market. The market has ranges that it constantly makes between resistance and support levels, and it will just ping pong back between those levels. And so what I have realized over time is that you can find those levels pretty easily, and then you can bet that the market's going to go down off of those levels and keep your risk relatively low, and then your potential profit much higher, which for trading is really good. You want a favorable risk reward. And other than that, I just stay out of the market because again, it keeps things simple and you can focus on essentially the low hanging fruit. And so this strategy can be used on really any market or any time frame. If you want to trade Forex, crypto, futures, whatever you want, you can do on an hour, 4-hour chart, daily chart. But what I do is I focus trading on the futures markets. They allow you to day trade with a small account, and I trade on a 15-minute and a 1-minute chart. So I trade a little quicker, but you can still use these concepts on a lot larger time frame if you like it. Now, so the first thing that I do is I have 2 separate time frames that I look at. And so how that works is on the 15-minute time frame, what we're currently looking at, is that's where I look for those swings in the market to draw the resistance or support levels. And so all I pretty much do for those is I look for 2 kind of clear touches in the market or some kind of signal to show that, okay, there's a resistance level up here. And then essentially you just wait for the market to come up to those levels. Right here, did a smaller reversal off that level. It's come up here again, and then you can kind of bet that the market's going to go down off of it, and currently the market's kind of sold off from that level there. And so what I would then do is go into a 1-minute chart, look for a couple signals, and kind of a 5-step framework checklist that I've created to simplify the entries into these patterns. So to show you what a real example of this looks like, let me walk you through a trade that I recently took using this exact strategy, and I'll show you the 5-step checklist framework that I use pretty much every trade I get into. And again, the first thing is looking for either that resistance or support level off of that larger time frame. We kind of just walked through that. And again, that's usually just looking for, a couple swings. And then when the market comes up again, like we are right here, looking for a couple key things to jump in, betting that the market's going to go down. And so this trading strategy, you can bet that the market's going to go up off of a support level, or like we are now, you can bet that it's going to go down. And I actually have more success betting that the market's going to go down. I don't know why, but over time, I've just seen myself more successful with that. And then the next thing is making sure that uptrend is actually broken so you can expect that the market is going to reverse. You often hear that the trend is your friend. And so if the trend is still showing that it's going to continue higher, well, you don't want to bet that the market's going to go down because then you're attempting to go counter trend. The whole idea is to try and predict and have reasons to say that, well, I think the trend is ending here. You can see it start to kind of fizzle out here, and then you can bet the market's gonna go lower. And so an easy way I do that is just drawing a trend line and then also looking at the swings in the market. The market pretty much just makes higher highs in an uptrend, and then when it switches, it starts to make lower highs. And so here it starts making lower highs and the lows start getting lower as well. And so that's kind of that trend shifting confirmation that I really like to look for. And then the fourth thing is looking for that market to essentially make one of those lower highs here. And it actually does it right here before the trend is broken. And so if you ever see that, this can sometimes happen, is I wait until it essentially breaks that trend. And then you can see here, it made another lower high, and that's plenty good confirmation to still get in on. And then the final thing is you want to see a strong reversal candlestick, really confirming one of those lower highs, because you don't want to get in like right here. If you look, this is kind of a weak bearish candlestick. It's a doji. It's just, there's a lot of chop going on right here. It doesn't really show you strength and conviction that the market could continue lower. Now it totally can off of that, but it's not a really good confirmation. Versus right here, you can see the market, essentially if you look at these two candlesticks, the market basically did a big move up, kind of pulled back a little bit, and then it goes to the next candlestick. That's pretty much in the one candlestick. And then in the next candlestick, it opens up here, tries to go higher again. It goes a little bit higher and then reverses lower a lot. And so that's a strong move of essentially the market making a mini double top and reversal. And so that's where I jump in. I jump in right kind of at the break of that candle, and then bet the market's gonna go lower. And I just put my stop kind of above here as, you know, a good spot based on just the market making these lower highs. Because, you know, if it's gonna keep going higher, you're wrong. That's totally okay. But like we talked about in the beginning, your risk reward ratio is really favorable because you're risking about this. And if I try and, you know, make that about the same size, you can see I'm already about up 2x. Down here is 3, you could go to 4, because again, you're catching those potential swings in the market. And the swing, if we look over here, just looking to the left of the chart, there's kind of a double bottom here, kind of a larger head and shoulders. That's probably where the market might bounce, right? And so that's a lot of good room to profit. And so that's kind of a hidden checklist item that you really want to look out for as well. Is there actually room for my trade to make me good money? Essentially, is there good risk reward potential? Because if there's a support level right here, well, yeah, you can kind of get a little bit of a trade here, but is it really worth the risk of, you know, the initial risk that you put on jumping on into the trade? You want to make sure these things line up really well, because I only take a couple of these every week. That's what trading's all about, is waiting patiently for things to line up perfectly, because then you can jump in on a trade and you can get really good risk reward and potential consistent profits from doing it. The hard part is patiently waiting for your one strategy to hold up. And that's what this challenge is all about. And so just to quickly talk about this strategy, is how I manage it is, well, I moved to break even kind of when it started going in my favor. And then you can see now here is we're in a tight downtrend. And so my thought is, well, we're kind of getting near the lows and the market's gone really well in my favor. For me, once I get up to about 3 times my risk, I like to trail up my stop and jump out when it breaks the previous candlestick high. And so that's kind of what it does here, and it's a really nice profit. Now if you want to use this strategy in the 90-day challenge, support and resistance levels are the key to making that strategy work. This video right here will dive way more in depth into how I find and draw my support and resistance levels, which is the key to finding these reversals successfully.